Hello, good morning. Welcome to the start of the week. So just a real quick update from me, because there's a lot to keep an eye on over the coming week, 2 weeks. All right. So really quick this morning. So there's a lot to watch out for. Okay, there's a lot of events happening. Let me just share my screen here now. And I'm just going to talk you through these really quickly, give you an idea. Basically, we can expect some volatility in the markets over the coming couple of weeks. So there's 4 events across 13 trading sessions that could impact the markets in terms of volatility, which is what I've got brought up on the screen. This is an implied volatility timeline. Doesn't mean this is going to happen, but this is what they foresee is going to happen in the markets over the coming couple of weeks because of the 4 events that are happening. Okay, so the first event that's happening is on the 7th of March. It's a 2-day biannual monetary policy by the Federal Reserve in the US, by Jerome Powell. Okay, and investors are looking for any indication about the central bank's interest rate hiking path. Okay, so what is the Federal Reserve planning to do? Are they looking to continue increasing interest rates? Are they looking to slow it down? Are they going to put it on hold for the time being? Okay, that's definitely going to be an event that investors are going to be looking out for. Okay, second event is the jobs report on March the 10th. Okay, followed by the consumer price index on March the 14th. Okay, so are people in more jobs, or is there less people, or it's more people out of work? Have we still got wage inflation? Is the cost of goods still going up? Okay, investors are concerned about hot readings on the employment growth and inflation, which could dampen the hopes of a Fed pullback. All right, so Fed might, if they're hot, Fed might just continue doing what they've been doing for the last 12 months. Okay, and then March the 22nd, the Fed will give its policy decision on the quarterly interest rate projections. Okay, Jerome Powell will hold his press conference, providing investors with a clearer idea of whether the central bank is going to halt its rates hikes in the coming month, or if they're going to continue doing so. All right, so the market, just to dive into that, the market is anxious about these events. Quite a lot of traders are betting on big swings in the volatility, particularly in CPI, and of course on the Fed rate decision day, which is on the 22nd of March. And traders, investors will be monitoring what Powell is saying in his testimony, just to try and pick out little clues on what the US economic outlook is. All right, whether that's inflation, wage pressure, employment, and the Fed may need to start taking additional steps. All right, labor markets strength is crucial driver for the inflation. Of course, more people in work, more people making money, more demand for goods. Okay, and any persistent inflation, of course, the Fed is not going to stop putting interest rates in. But remember, to get inflation down, interest rates need to go up. All right. Consumer price index, the inflation is going to be crucial, particularly in February when, sorry, a couple of weeks ago when it came out a bit higher than expected. Markets sold off because they're expecting the rates to increase. Looking forward, okay, the market is pricing in the fact that in September, interest rates are going to start coming down again. So, or peak is what they say. Okay, so there is a potential that the Fed is going to start with that pricing in. There's a potential for the Fed to start looking at bigger interest rate increases now, so that they peak in September, and September is when we can expect to start coming down, for them to come down again. For those of you that I've spoken to, you know, we've had this discussion. Interest rates are likely to drop off towards the end of the year, and you know, it's all going to come down to what Jerome Powell says. Okay, so his comments and the decision afterwards is going to affect market sentiment. Okay, so you know, if data comes in higher than expected, we can expect market volatility. We can expect market sell-offs. Okay, me personally, you know, I think the market's priced in quite a lot of the bad news. I don't know if there's going to be too much of a shock on the way after what happened 2 weeks ago. However, there are key things that the market's looking for, particularly around the Fed. And we're just going to have to sit back, wait and see. Key is remain invested. Certainly, if we see these periods of high volatility, perfect time to buy, because typically you're going to be getting cheaper. Okay. And remember, if you're working with me, all right, we're thinking about the longer term anyway. All right. We're not talking about becoming day traders here and taking advantage of market sentiment. No, we're talking about get invested over the longer term, short, medium, long term, and taking advantage of these market times. All right. So any questions, please just reach out, let me know. And I look forward to catching up with you again soon. And don't worry, you're going to get my weekly market update. Let me keep you informed. Let me keep you in the loop on what's happening. And yeah, hopefully we can ride this all out together, self-included. So yeah, great. Thank you very much. Have a good week.